Good morning, class 12th. Welcome back to your business study online class. And student, today we'll be discussing about the modern technique of managerial control. Student, I'm just going to revise you that what we have done into the traditional technique of managerial control before starting the modern technique. The technique of managerial control we have divided into two parts. The first one was the traditional technique and the second one was the modern technique. I have discussed with you that traditional techniques are all those techniques which a company or organizations are using from a long time back and they are still utilized by some of the companies. Now these techniques are personal observations, statistical reports, break-even analysis and budgetary control. So these four are the type of traditional techniques which we have already discussed, and today we will be discussing about the modern technique of managerial control. So when we talk about the modern technique of managerial control, it basically means all those techniques which are recently developed in the language or in the literature of management. They are the newly technique which has been developed, and the first modern technique is return on investment. Return on investment can also be called as ROI, and this is a very important technique because it basically provides us the information by which we are able to measure that within a particular invested capital are we able to generate a reasonable amount of return or not. So that all information we are able to gather by the help of ROI. So when we talk about ROI basically means if we have invested anything into the organizations, every owner want to know that within that investment amount how much of profit or a reasonable amount of profit gaining is possible or not. So if we want to go through with that studies, we use ROI. Now to calculate ROI, we have to take out the net income before interest and tax and capital employed. Now it's written net income before interest and tax because there are certain organization when they take out the net income they deduct taxes from there, and there are certain organizations which use taxes inside the net income. Now when we divide that from the capital employed, means when we are dividing our net income from the capital which we have invested into the organizations, we got our ROI. So this is basically a formula of taking out ROI, that is return on investment. Now when we talk about return on investment, we have to be very careful that ROI provide top management an effective means of controlling for measuring the comparing performance of different department. It means by the help of ROI, every department will be able to compare that how much investment they have done into their organization or in their department and what was the rate of return which they are getting. So in this way every department is able to compare their performance with other department. Now the next way of managerial control technique is of modern technique is ratio analysis. Now when we talk about ratio analysis basically it refers to analysis of financial statement through computation of ratio. Means when we are taking out our financial statement, when we are knowing exactly the financial position of our company by the help of calculating ratio, so we call that method as a ratio analysis method. Now ratio analysis method is also classified into different categories. The first is liquidity ratios. Liquidity ratios, we have to understand that we are using this for the purpose of calculating or determining the short term solvency of business. So short term solvency of business basically means how easily within a short period of time means within 1 year of time, we are able to convert our assets into cash, that is called as liquidity ratios. Now next is solvency ratio. Solvency ratios are calculated to determine long term solvency of a business. Long term solvency of business means more than 1 year. It means how you are able to, which are the assets which more than 1 year, by using after 1 year you will be able to convert these assets into a form of cash. Now profitability ratios. Now these ratios are calculated to analyze the profit position of a business. It basically involves that after what point of sell or after what point of fund investment we will be getting profit in our business. Next is turnover ratios. Now turnover ratios basically are calculated to determine the efficiency of operation. Efficiency of operation basically means if we are using our resources in an effective manners, it means we will be having more and more turnover, means more and more production. So this is all about the ratio analysis of modern technique. Next we have responsibility account. In responsibility accounting, this is another modern technique of manager control. Here what a manager did is the responsibility account, it is basically a system. Here different sections, departments and divisions are set up by the manager, and they call all these section, department and division as a responsibility center. The head of these centers are responsible for achieving the target which is set by the center there. Now what are the different center which is appointed there? So the first is cost center. Now see, what is a cost center? When we talk about cost, it means we are talking about the expenditures, we are talking about the expenses. So this is basically a center in an organization in which a manager will be responsible for the cost incurred into the center, but not for the revenue. Means where a manager is responsible to see about the expenditure of the organization, not about the profit or revenue. Now next responsibility accounting or next department or responsibility center can be a revenue center. Now when we talk about cost, we are talking about expenses. Now when we are talking about revenue, we are talking about organization which is primarily responsible for generating revenue. Revenue basically means like a marketing department is responsible for generating revenue after selling a particular product. So we are going to discuss all those things into a revenue center. Profit center, a profit center will be an organization or a department where the manager will be responsible for both revenue and the cost. Why? Because we will be getting profit when we will take our revenue, we will divide the cost from the revenue, and then only our net profit will come. So profit center basically means where they have to discuss, they have to study about the cost also, and they have to study about the revenue also. Next will be investment center. Now investment center is basically a center of responsibility which is where the manager is responsible not only for profit also, but the manager is also responsible that in the center how much assets has been invested, means how much money has been invested into which department, into which asset. So these all are the different type of responsibility accounting. Now next we have in modern technique for manager control is management audit. Now management audit basically a very simple thing, it's related with the auditing of management functions. So we can say that management audit refers to systematic appraisal of overall function of management of an organization. Now here what management audit did is, in this management audit technique, a manager check whether all the function of management, all the function of management means planning, organizing, your staffing, directing, controlling, these all function of management are utilizing effectively or efficiently or not. Because these are the 5 functions, if they are utilized effectively or efficiently into management or into any organization, we can say that we will be able to improve the organization, we will be getting result or good result. So now manage by the help of management audit, a manager used to see that the function of management are utilizing properly into the organization or not, or in case they are anything which is lagging behind, they need to improve on those areas. So this is all about management audit. Now when we talk about management audit, there are certain advantage every organization got if they are going through with the process of management audit. You can understand that if the function of management like planning, organizing, directing, staffing and controlling are utilized properly inside any organizations, what are the different benefit they will be getting. So the first benefit they will be getting that it will help them to locate the present and potential deficiency in the performance of management function. It means wherever they feel that any function of management is not working properly, they will be able to take out those deficiency, and according to these deficiency only they will be able to work out. Now the next advantage is it help to improve the control system of an organization by continuously monitoring the performance of management. Now in the help of management audit, we used to continue see how the performance of management functions are conducted inside the organization, means how the different function of management are going inside the organization. So in by the help of this continued monitoring, we are able to improve their performance. Next is it improve coordination in the function of various department so that they work together effectively towards the achievement of organizational objective. Now whenever we start any project, we have to divide the work according to their nature into department wise. Now every department we need to invest certain monies. Now this help management auditing help to see that each and every departments are working in a coordinated manner so that the organizational objective can be achieved. Now next is it ensure updating of existing manager policies and strategies in the light of environmental changes. Now this function of management audit or management audit disadvantage say that after the observation of different function of management, if a manager find that there is anything, any policies which need to be changed, that can be changed. So this is all about management audit. Now PERT and CPEM. CPM is the another technique of manager control in modern technique. Now what is PERT and what is CPM? Now when we talk about PERT students, PERT full form is Program Evaluation and Review Technique, and CPM is Critical Path Method. Now PERT and CPM both are a very important network technique which is used in planning and controlling. Now these techniques are especially useful for both these for the time bounded project which involve performance of variety of complex, diverse and interrelated activities. Now these techniques deal with time scheduling and resources allocation for these activities and aim at effective execution of project within given time, schedule and structure of cost. You have to simply understand that PERT full form is Program Evaluation and Review Technique and CPM is Critical Path Method. Now these both the techniques help in planning also or in controlling also. How these both the techniques are useful for those type of project which involve lots of variety of activities and which is time bounded project that they are supposed to be finished within this particular period of time, and for conducting the work they are required to do lots of activity, lots of resources are used here. So how to use these resources, how to schedule that, how to locate these resources, how to conduct the activity in an effective manner, so this all we used to study into PERT and CPM method. Now what are the different steps which are there at the time when we execute PERT and CPM method inside any operations? So first is the project is divided into a number of clearly identified activity which are then arranged in a logical sequence. It means PERT or CPM में where we have already discussed that we are taking a operation within a particular time boundation, we have to finish that operation into different sequence manner. तो सबसे पहले काम करना क्या होता है PERT CPM में, आपका जो प्रोजेक्ट है, आपके जो ऑपरेशंस हैं उनको आपको बहुत सारे छोटे छोटे एक्टिविटीज़ में डिवाइड करना है और इन एक्टिविटीज़ को आपको अरेंज करना है एक सीक्वेंस में, दैट विच वर्क इज सपोज टू बी डन फर्स्ट एंड देन विच वर्क another. Next is a network diagram is prepared to show the sequence of activities. Once you have divided the activities into a sequence, उसके बाद you have to make a diagram to see the sequencing. Third, we have to estimate the time. आपको time estimates are prepared for each activity, means every activity is required to be know that within which particular period of time this activity is supposed to be finished. So PRT required the preparation of 3 time estimation. जो आप PRT में करते हैं, हम कोई भी एक्टिविटीज़ को जब टाइम बाउंडेड करते हैं तो उसको 3 टाइम में डिवाइड करते हैं. एक होता है ऑप्टिमिस्टिक, दैट द वर्क शुड बी डन विद इन ऑप्टिमिस्टिक टाइम, मतलब शॉर्टेस्ट पीरियड जो हम डिसाइड करेंगे. पेसिमिस्टिक, जहाँ पे एक लॉन्गेस्ट पीरियड किसी भी ऑपरेशन को कंप्लीट करने का डिसाइड होगा. एंड द नेक्स्ट विल बी CPM, दैट इज ओनली वन टाइम विल बी एस्टिमेटेड, एक ही टाइम एस्टिमेट होगा. एंड CPM ऑल्सो रिक्वायर्ड मेकिंग कॉस्ट एस्टिमेट फॉर कंप्लीटेशन ऑफ प्रोजेक्ट. टाइम के साथ साथ में दैट the how much cost is going to be done there, taken there, this is also going to be decided in CPM. Now the longest path in the network is identified as a critical path. It means we have said 3 path will be there, 3 time period will be there. Shortest time period किसी भी प्रोजेक्ट को कंप्लीट करने का, जिसे हम बोलते हैं ऑप्टिमिस्टिक. लॉन्गेस्ट पीरियड हो गया जिसे हम बोलेंगे पेसिमिस्टिक. एंड थर्ड विल बी अ लॉन्गेस्ट टू लॉन्गेस्ट पीरियड, यानी बहुत लंबा पीरियड जो होगा जिसे हम बोलेंगे क्रिटिकल पाथ पीरियड. नाउ if we require, the plan is modified so that execution and timely completion of project is under control. After deciding the time and after coming through with the critical path time, if we feel that everything we have done but we are not achieving the objective of the project, in that case what we have to do, we have to change the project control, we have to change or modify our execution also, our plan also, and we have to modify the timing also. Now this was about PERT and CPM. Now next is Management Information System, MIS. Now Management Information System, student, is a computer based information system. It provides us information and holds support of information by effective management decision making. Now a decision making required. Now whenever a manager took any decision regarding any function of management, it required information about that thing and how the information can be get, even by the help of MIS also, where we are using a computer network to collect, to gather and to store information, so that whenever a manager need that information, he can able to take out that information from the computer. So this process of systematic processing a massive data and generating that data whenever required by manager is called as MIS. यानी आपको MIS क्या, बेसिकली कंप्यूटर नेटवर्क के थ्रू इंफॉर्मेशन को कलेक्ट करना, उसको स्टोर करना, और वेन एवर वॉन्ट टू रिव्यू दैट इंफॉर्मेशन is a process of MIS. So this is all about the different modern technique of manager control. This is the syllabus of your pre-board first students, and I hope you have done the complete and good preparation for your pre-board. Best of luck for your first pre-board exams.